Hey, how you doing, Olivia? Oh, no, doing okay. Can you hear me? Right.
Okay, can you hear me?
No,
Okay.
I'm
I'm doing good. How are you?
I'm doing phenomenal. I have no complaints. Just over here making things happen one day at a time.
Gotcha.
All right. Yeah. Can you see me okay?
Oop. Yeah, I can see you. It's just like,
Oh, yeah, I think you muted yourself. Can you hear me, Olivia? I think you muted yourself. What's going on, Veronica?
Hello.
Hey, I'm gonna tap into the march real quick. I'm about to start sharing my screen here in a moment. Just wanted to get a introduction out of the way before we got started. 1 second. So I'm not even sure. Okay, it is recording. All right, cool. And it's cool if you don't want to be on camera. No, unfortunately, you want to be on camera. Just want you guys to get the knowledge and be empowered by trading these Forex markets. Olivia, you got cut off there. I don't know if that was a technical issue or not, or if you had to go or something, but
no,
so
no, no, I'm still here. I can still see you fine.
okay, cool.
Can you hear me?
I'm
Okay.
about I'm about to share my screen real quick. If somebody could let me know when they see it, that'd be a blessing.
I see it.
Cool. All right, so just starting off with you guys, thank you for showing up tonight. I'm sure some people will pop in and pop out, but nonetheless, just tapping in. Wanted to be very intentional about getting you guys some knowledge on how to make money in the forex markets, foreign exchange markets. I know people hear forex and they don't necessarily know exactly what that means. They don't know exactly what that is, but that is foreign exchange. That is the exchange. Give me 1 second, let somebody else in. That is the exchange of currency going back and forth from one currency to another at a certain price. And there's basically ways to capitalize on that. So what you're looking at tonight is strictly the simple fact that we are going to be getting into these forex markets, and I'm going to show you guys a few things. But before we do that, I wanted to introduce you guys to Lions Wall Street, who we are, and how we can help you out. But in a nutshell, I'm a discretionary price action trader. What's going on, Harold? How you doing, King? But yeah, I'm a discretionary price action trader. In a nutshell, I've taught people all around the world at this point. I mainly teach in other countries, but I am currently here in Ohio teaching people how to trade gold. Gold is my thing. Some people have, different ways to look at the markets. I choose gold. So what we're going to look at today is Trading View. Um, this is the professional standard of looking at the markets. Let me just get my chart together real quick, and we can kind of go from there. But I just want to make sure I'm getting you guys a fair shake at what you guys need to be paying attention to and what you're looking at. I'm trying to join. Give me 1 second. Yep, you got to have an account. And just future references, I'm sure apparently everybody here has an account, but you need to have a Zoom account in order to join these Zoom sessions. So, second, this message, somebody trying to get in. All right, cool. All right, so as I was saying, Lions Wall Street, we dedicate ourselves to trading gold mainly because it's such a volatile but also predictable volatile asset that a lot of people, financial instrument rather, I like to think about it as an asset, but a financial instrument to grow your portfolio. So it doesn't matter whether you're trying to retire, it doesn't matter whether you're trying to just add some supplementary income, it doesn't matter whether you're just trying to replace your job, whatever you're looking to do. Gold is it's volatile enough where you can make some moves. There's three different gold pairs that I choose. The first one, let me stretch this back out so you guys can see it. The first one is mainly gold versus the US dollar. And that's what we're looking at now. If you see the screen, we're looking at gold versus the US dollar. I also trade gold versus the European euro, and then I also trade gold versus the Aussie dollar. And the only reason where that's important is These are different markets. However, you don't want to confuse just because the gold and Australian dollar is going up. It doesn't mean that the gold and the US dollar will go up as well too. So each of these markets operate separately. If you don't know what foreign exchange is and this is your first introduction, I can basically tap in with you offline. This is not the time to kind of do that. I wanted to go over charts and go over marking up, but if you do and you are looking to basically trade gold and make money off of gold, that's a whole nother class for a whole nother time to set up brokers accounts and make sure that you can get your account funded and things of that nature. But that's a whole nother conversation. Right now, we're going to look at the market and I'm going to go ahead and start marking things up for you guys. Last week, gold had a high of 2690, 2690.89. I think it finished, it flamed out at 2689 after the markets closed. Gold opens back up just like every other market opens back up at 6 p.m. So I normally let it run for about 2 or 3 hours and then I teach a class. I used to have this class at 9 o'clock. I'm having it at 8 just because I'm trying to get in bed around 10 o'clock. And the only way I can do that is if I have this class at 8. So in a nutshell, this is what we're looking at right now. What you are currently looking at are called candlesticks. This is the actual market, the actual prices of what gold is currently at. And in a nutshell, we're just looking for certain signs that are going to show us for next week what gold could possibly do, what it could potentially do. I want to go ahead and put a disclaimer out there in advance. I am not, I'm not psychic. I'm not predicting the markets. What I'm doing is showing you guys opportunities where you can take advantage of so that you can make money with gold as well too. It's from my expertise of the years of me trading gold. And it's also from my expertise of just, being in the markets as a scalper and being in the markets as a long-term trader as well too, meaning holding trades more than 2, 3 days a week, sometimes depending on what my trading plan is. So I teach all these things during class, during the week about trading plans, how to come up with your trading plan, how to come up with a trading plan that is more for you. Everybody. Yep. Got a question here?
No, I'm
Okay.
sorry. It's my microphone on.
Oh, yeah, it is now. I don't know. Yep.
Apologize. I'm
Okay.
in. Truth be told, I'm in Cancun. I'm trying not to interrupt you. I'm going to mute myself.
That's a blessing. That's a blessing. That's what's up. All the way from Cancun. That's what's up. You got there quick. I just saw you, man. Got there quick. That's a blessing. Okay. Well, yeah, nonetheless, we're over here trading gold. Got people in Cancun tapping in, so I appreciate your hero. Thank you for tapping in for Cancun. I haven't been to Cancun, man. I've been to Mexico plenty of times, but haven't been to Cancun yet. So in a nutshell, right now we're currently looking at gold, and as I was saying, gold flamed out at about 2685. It was on a run. I'm going to let someone else in. It was on a run. This is what you're looking at now. These are called candlesticks. These candlesticks are a representation of what the price of gold is actually currently doing. What's going on, Monster Yo? What gold is actually currently doing. And I want to take a look at this candlestick.
Peace to you, King.
Hey. Yeah, we're hopping right into it, but I want to go ahead and take a look at this candlestick specifically. This is what we call, let me let Days in. This is a candlestick that we call what's called a lollipop. It has different names. Every one of these candlesticks that you're looking at have a different meaning, but this one specifically right here, this is a reversal type of candlestick, and what that basically means is once price came all the way down here to 2663, what that meant is after this reversal signal, meaning price came down here and rejected all the way back up to 2677. My prices are right here. You guys can see the screen. All my prices are right here. And what that means is after you see that much rejection, that's what this stick right here is called a wick. And what that means is the rejection from price coming all the way down here, and there were enough buyers around to say, hey, no, we don't want price that low. We want to drive it up. We're going to drive the price up to 2678. And then this candle ended up finishing up at 2682, just a little bit below Friday's finishing price. But this was a key signal to let us know that gold is about to jump back up. So anything coming down here, definitely signs for buying. So what I'm looking at right now, I'm going to go ahead and stretch out my charts real quick. I'm going to go ahead and go on the week time frame real quick. And if none of this makes sense, just try to hold on, because I say like this, it gets broken down during the class during the week, but right now this is literally just prediction. So I just want you guys to be able to know what I'm predicting currently, what I'm saying might or may happen, and then I want you guys to check the charts over the week and
All
just
that juice that came out the hamburger meat.
what's going on, Days. How you doing?
Juice in your stomach.
Can you hear me?
Yep.
Can you hear me, Dave? Oh, yeah, I got you. He's a little occupied, but nonetheless, I'm going to get it on a week chart right now. Just looked a little crazier. Dial this back down. And so I want you guys to notice a distinct pattern of what's going on. And these are weekly candles right now, meaning that each one of these candles, one, two, three, four, all these are different candlesticks, right? Now, each one of these currently mean that this is a week of pricing going up and down, up and down, up and down. Now, if you look at this yellow line right here, this is called an EMA, an exponential moving average. And all that means is that for a majority of these candles, it's a moving average, meaning it's the average of all these candles being made up. That's all that is. And so this moving average is basically saying that once price comes down here to this moving average, it's been basically bouncing up. It's been using this moving average of what we call support, meaning that it's supporting a certain price and it's not going to go below that at this point in time. That's all that means. You got me? And so what I'm looking at right now is a double bottom here, right? Now, gold came down here to 25.36. That was probably 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks ago. Now, I'm not expecting it to happen this week, but I do expect another drop. But currently, as we stand, we are on an uptrend. We're on an uptrend of where gold is going. So this class is only going to be about 30 minutes, but I'm just going to mark up these charts real quick. Give me a second. And I want you guys to, and after I mark up the charts, I'm going to break them down on what exactly it means for me to mark up the charts the way I did. And that way you guys can have some clarification and some guidance on where gold could possibly go by Friday, the end of this week, and how you could possibly make some money off of this same chart. All right. So that's my whole goal with doing Sunday night markups. The markets open back. Well, the markets aren't going to close after this, but New York markets open back up at 8 p.m. Eastern Standard Time or 9 p.m. Eastern Standard Time. So in a nutshell, that's what this session is for, specifically to mark up your charts and then know what you're going to do throughout the week when the price gets to a certain point. So you will know whether to get in for a buy, to get in for a sell, or just to stay out the market and see what it's going to do. That's the main purpose of what we're going to be marking up these charts for right now. So the first thing I want to look at is this trend line right here that I just marked. I'm going to get rid of these just to clean up the charts a little bit. This trend line that I just marked. And all that trend line is where price has basically come down to and then bounced back off of. And if you look at this enough, you'll see that it almost feels like it's predictable because it happens, but no, but obviously this is the past prices. From the left on is the past prices. Past prices don't matter. What only matters is the prices to the right of the current price, what currently happens. So what I'm predicting is gold is going to continue to come down here. Let me move this video. Gold is going to come down here to 2640 at some point during the week. That would be the ideal time to jump in. Because if you see this line right here, this EMA, this exponential moving average, this little small yellow squiggly yellow line, that's at 2602. My yellow trend line that I just created is at 2625, around there somewhere. So this is what I would call an area of confluence. And all that means is that there's multiple signs that gold is going to come back to this price around here somewhere and then shoot back up again. And that's all we're necessarily looking for. And with trading in general, for anybody who knows anything about trading, you don't need to be right. You just need to understand how to work your trades. And that's more during the week type of classes that I'll be teaching. But right now, give me 1 second. Let me finish marking up these trades. I like to do tops and bottoms because, yeah, gold may go up, but you also want to know where it could possibly stop going up at, right? That's an important thing because you also need to know when to get out of a trade. Even if you're in a winning trade can turn to a losing trade if you're not out in a certain amount of time. So that's what we're looking at right now. So I'm currently looking at different levels where price has reached throughout the weeks. I'm going to stick to this specific area right here just for the simple fact that this is probably like the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It's over the past 20 weeks of gold prices, and that's kind of all you need, honestly. You don't necessarily need anything past that because past information is past information. It has nothing to do with what will currently go on, but it does serve as a baseline to where possibly gold could go as price. And what I mean by that is I'm also going to show some price markers of where I see support and resistance. So I just marked up my two trade lines. This one right here, trade line number one, trade line or trend line number one, trend line number two, right? And then now I'm going to mark up my what we call support and resistance. All right. And support, all that means is when price comes down, all that means is it keeps coming down to the same price, keeps coming down to the same price. Sooner or later, that price is going to bounce up and go to a certain what we call resistance, which would be at the top, meaning that it's resisting going over that price. That's all that means. So when you think about support, just know support is at the bottom of price and resistance is at the top of price. So that's a whole nother class for a whole nother time. Like I said, we're just marking up right now. So this is what Sunday markups look like in a nutshell. Nothing too crazy. I'm going to explain why I put this line there in a moment. I'm also looking for another line, but I might have to break down to a smaller time frame, probably like a 6 or 8 hour time frame to get a better look. But I'm going to leave these here right now, and then I'm going to break down to, let's do an 8 hour and see what this looks like on an 8 hour chart. So just know that this is the same chart, but it's going to look completely different because now these lines are going to basically be on an 8 hour chart, meaning every candle is going to be an 8 hour candle instead of a week candle, WEEK, as it is now. Yep. Give me 1 second. Letting someone else in. All right. So in a nutshell, what we're looking at right now, price is currently at 26.86 right now. I should probably be getting in for a trade. I'm honestly going to probably hold out to like 26.70, me personally, 26.70, because I do believe gold is going to go up, but I'm also waiting on a drop. I always like a discounted price. And if you think about trading, the only thing you really need to know, breaking it down to, Barney in a bag, all it means is that if gold is 2,600 and you go in for a buy, you probably want to get in at 25.50 because that's a discount because it's not at 2,600 anymore, right? So if you get in at 25.50, that means you have a discount on price currently at, especially if you know it's in an uptrend, meaning the price is going to go up. It just happened to drop down. That is my strategy. All my strategies are based off of a bullish market. And now all that means is that I'm looking to get in for a buy and I'm looking to get out at a higher price than where I actually made my entry position at. All right. So backing up just a little bit, we're going to go down to a 8 hour time frame real quick. Oh man, I can't do 8 hours. We're going to do 4 hour. We're going to do a 4 hour. I can't do 4 hour on this one. Give me 1 second. What happened? All right. Down. So these are 4 hour candles. Those are the same lines that you're looking at. I can get rid of these. These are old, super old. Don't need these. But those same lines that I just drew together, they just look different. They're still on there, but they just look different because it's on a different time frame. So it's kind of hard to tell on this one. Give me 1 second. Squeezing all this in. All right. Now, let's go back. We're going to go back to a 1 week time frame. So I feel like it'll be more suitable for you guys because there's not much movement. Gold didn't move that much last week. I'm not going to lie. It moved enough to make money, but it didn't move enough last week to be like, okay, here's a lot of swings and a lot of strides in any one direction. So I'm going to break this back down for you guys. Now let me zoom in. Stretch this out. All right. So this bar right here, this line that's going through, the reason why I put it there is because as you can see, there's been signs of basically support and resistance. Right here is coming down. It's showing support. It's showing support. And now right here, it's showing resistance, meaning that because it was showing resistance at one point in time, it's going to show support when price comes back down here. You got me? It's more than likely going to get stuck there because when price breaks through a certain level of resistance, it doesn't just come back and forth just automatically. Normally, it finds a midway point because that's where buyers and sellers are comfortable with the pricing being at so far as their entry positions. It's not just you trading. You're trading against millions and millions of other traders. And so all you're looking at is what people feel like is a high price or a low price, right? And so this is the candle that the price is currently on. It's at 26.84. So I'm expecting it to come down here to not only my trend line, but also this support or resistance line, depending on how you're looking at it, at 26.52. So I know I said 26.70, but technically, as I'm looking at my chart, the best price for me to get into is 26.70. So I'm going to write that down. I'm sorry. What I wanted to get in at is 26.70. The best price, what I'm looking at to get into for support and resistance purposes is 26.48. Around here, 26.48, 26.52. So I'm gonna write that down as key entry points. So basically, if gold goes back down to that price, I'm getting in for a buy because I know no matter what, it's at a discount. I know it's gonna go up, right? And I will show you guys an account to show you what that even looks like to place a trade if you guys do have an account already with the broker or something. I'll show you guys that, and then we can go ahead and get offline. We got about 9 minutes left, and you guys can enjoy the rest of your night. Give me 1 second. So I'm gonna write that down. 26.52. 26.48. That's my price range. So if you get in at 26.52, that's fine. But the best price that I'm looking to get into is 26.48 right now. And then I'm gonna try to ride that thing back up to wherever it goes during the week. And that would be enough for me to feel comfortable. I can put my stop loss at a certain position, and I can put basically my stop loss is where I plan on losing no more money. If my trade goes bad on me, I'm not losing no more than a certain percentage. And I'm gonna do one ATR average true range, which is these little blocks you see in the background, those are ATRs. And I'm gonna do one ATR under the price that I say I'm gonna go at. So this is where I plan on getting in at. I'm gonna put my ATR, my stop limit price, or my stop loss price right here. And that would be, say, let me get that straight. And that would be at 2600. So that would mean I would be willing to lose 30 or what's this? I would be willing to lose about 50 pips. That's a little bit extreme depending on your stop loss. So nonetheless, that would be stop loss. That's one ATR. So make sure whatever you're trading at, if you're trading whatever lot size you're trading at, make sure your account management can manage that type of trade. So if you're off, you're not off more than your stop loss. You're just off because of trade loss. You got me? So that's one possibility where gold can go. So I'm gonna say that gold can come here and then bounce up. Can I get an arrow in here? Gold can bounce up and go anywhere from 26.52 all the way to about 26. Give me 1 second. Let me get this arrow up here. And I will give you guys where I'm going to be getting out at on my trade. So I'm saying gold could possibly do one of these. So gold comes down here, and then it bounces up, and then it's probably going to follow this trade line all the way up. I do feel like it's the beginning of the year. Between interest rates, I try not to trade off of news specifically, but I do know that it does have an impact in what the American dollar is currently trading at. That has an impact on gold directly. So that does have come into play, but nonetheless, gold is going to do what gold is going to do. And what I'm saying it's going to do is what I'm saying it could potentially do is come down here to 26.50, 26.42, 26, I'm sorry, not 42, 48, 26.52 area, and then come up here to 28.67. Now that's not unheard of. That's about 200 pips away, almost 210 pips away. And all that means is that from here to here, there's money to be made. You don't need all those pips to win. In all honesty, I would probably that's the maximum. That's where it could easily shoot up to. Seen it before, done been part of weeks where Golden went up to 200 pips. But right here, this line right here is what I'm gonna call my take profit for the week, just because price has been there. So what you'll notice is what gold will do, is because it's trending right now. As you can see, gold started all the way down here and it's going up, going up, going up. But what gold is known to do is to be stagnant and just kind of bounce back and forth for a while. But it is currently uptrending. So I'm not going to ride my complete predictions just on their uptrend. I'm going to ride it off the fact that, hey, I know for a fact if it is an uptrend, if it does come down, it's going to at least go back up to 2780, 2790, 2795, just because it's been in that area the previous week. You guys see what I'm saying? Outside of that, I'm going to go ahead and put some what's names in the group. We got 5 minutes left. I'm going to put a signal in the group for you guys to follow. And then we can kind of go from there. But that is my trade analysis for the week. I believe gold is going to come down 2648, 2640 at a minimum. That still falls within your stop loss area. And then I believe it's going to shoot up to about 2690. And honestly, me personally, from what I'm seeing, if it's trending, it's going to be in the 2700s, 2720, 2750 by the end of this week. But that's what I know what it's going to do is what I just said it's going to do. But what I will say is that you want to make sure that whatever you're trading at, whatever lot size you're trading at, meaning however much your money you're risking, you want to make sure you still have proper account management. And if you don't know what proper account management looks like, that's something I can go over with you as well. If you need a trading plan, that's something I can go over with you as well. But right now, I'm going to go ahead and drop a signal real quick here on the group. So we're going to do entry price. Call it 2650. Area, I'm going to say area. Take profit. Number 1. So the first place that you can definitely take profit at is 2683. Take profit. Number 2. I'm going to say we'll call it 2714, 2715 area. And keep in mind, these are all areas. I don't want y'all to be like, oh, Lionheart, you said it was going to go here. No, I'm sure you said 2715 and it only went to 2712. I don't want to get no emails later saying that it didn't go to 2715, but it went to 2712. Now I don't know what I'm talking about. What I'm saying is it's going to be in that area, and that's where you can take profit from and feel comfortable all the way down once price does its drop, because gold always does a drop one way or another. There's as many buyers there are in the market, there's always a seller, right? That's all I'm saying. So these are all areas. And then take profit number 3. And we're going to call that this top one right here. We'll call it 27. We'll split the difference because that was a high. We'll call it 2760 because I don't like to pit the exact highs, because when you try to reach for those, that might have been a fluke. It might have been a reversal. This I'm specifically talking about this candle right here. It might have been a fluke. It might have been because clearly there was a lot of rejection. So what I'm looking for is the same type of retest, meaning the price is going to go back up here and retest, but it's probably gonna fall short somewhere around here. And that was weeks ago. So it is the week that it does that. I'm going to at least say that this was the area that we can call it. So we'll call it 27. Call it 2732 area. All right. And what I'm saying, what price will not drop under, so where you can set your stop loss at. If I'm doing 1 ATR under my lowest price that I would go in at, which is 2650 area. So gold hit here. Right after that, we'll do 1 ATR. So we'll do 1 ATR. That's 2514. That's way too low. I'm not about to have a stop loss that low. So we'll just keep this stop loss right here. Because what I want to see is I'm going to extend this out because of what I get the feeling is it's going to continue to follow this trend line right here. It's either going to follow this trend line or is potentially going up on this green trend line right here. But what I'm saying is right here is where you want to set your 2,600. So stop loss. And we'll call it just because I don't like that deep of a stop loss. We'll call it 2620. All right. So that is the signal right there. Looking at the markups. If you guys have any questions, I'll stay on a few minutes after. Outside of that, Monday, I will be back in the markets tomorrow morning. I will be getting started. I have training. So we'll call it 9 o'clock, 9:30-ish. I'll be back on. We can go ahead and call it 9:30. I'll be ready by 9:30. I'll trade the markets probably from like 9:30 to like 10 o'clock. I'll try to make like $200, $300, $400 and go from there. Just for you guys. But if you guys don't have a trading account, this is something that you can look into. If you guys don't have a broker, that's something you can look into. This is a demo account that I'm working on right now. Just to let you guys know, don't be coming over here asking me for money. This is a demo account I'm testing a strategy on. That is all. Okay. But clearly price is dropping right now in gold. Let's go back to gold and look at it real time now, because price is currently dropping and it's coming towards my price. Like I said, gold always drops before it goes back up. So if you see gold going up, you always want to wait on a drop. You always want to wait on the discount is how I look at it. Wait on the discount. It will show back up. It will go back up. Just wait on the discount. It's going to come down to your price. Be patient this week if you're trading. If you have any questions, feel free to DM me, email me, call me, however you get in touch with me, text me, call me, beat me if you want to reach me. All right. Outside of that, that's my time for the day, Queens and Kings. You guys have a great night. Are there any questions I can answer right now? Other than that, we're done for the day. All right. Cool. Y'all be safe. If you guys need anything from me, if you need to apply this to what you're currently doing, if you don't have an account set up to trade, let me know. I will be helping you guys set up accounts all throughout the week so that you can trade. Give me a call if you need anything.
No doubt. Good looking on that, man. That was very informative.
All right,
Yeah.
for sure, King. If you have no
Appreciate you,
questions,
bro.
if you have
Definitely
Yeah,
appreciate you.
thank you for the info. Have a good evening.
you guys have a good night. Enjoy your week.
Absolutely. Likewise.
All right. Grind.
Grind.
Yep.